a lot of times people come to us and say, I still just don't understand if I'm making money or not. And I've asked my CPA, I asked my bookkeeper, and they honestly couldn't tell me either. That's not a good place to be.
All right, so today we are doing an in-depth review of e-commerce accounting questions to ask your CPA to see if they're legit. If you're in e-commerce and you either don't have a reliable accountant or you're questioning if your current accountant CPA is reliable enough and if they're experienced enough with e-commerce, you're going to love this video. And that's because I've found somebody who we're going to find is a wealth of knowledge in this space of e-commerce accounting. And specifically what we did is we created a list of questions you should consider asking your CPA or accountant to see if they actually know what they're talking about. But better than that, Matt Remuzzi of CapForge is going to go through and actually give you insights on all of these questions and why they're important to you as the business owner, and making sure that you're not leaving money on the table or potentially having pitfalls that are going to come up in the near future that you could have avoided just by watching this video. So let's jump into the interview with Matt, and trust me, you're really going to appreciate that you spent the time to look through this entire video. All right, let's get to the interview. I'm joined by Matt Remuzzi of CapForge. How you doing today, Matt?
Good. Thanks for having me.
Yeah, of course. And Matt, you've been at this, I think, 20, 25 years that you've been in bookkeeping, and especially you've niched into e-commerce bookkeeping as one of your services, right?
Yeah, it's probably coming up on about 10 years now of doing e-commerce specifically. We started with one client and it's grown to hundreds and thousands over the years of e-commerce clients. But, it really is its own specialty. It's its own unique thing, right? You wouldn't go to your dentist for an eye problem. You wouldn't go to your eye doctor if you broke a bone. This is one of those things, right? You're not going to get the best results, at least, going to the down the street CPA or bookkeeper when you have a very specific type of business like e-commerce. It's just got too many of its own little quirks and ins and outs and things. So that's what we've specialized, and that's what we've learned over the years, is all the quirks of this particular industry from an accounting standpoint.
And my goal with this video is for somebody who's watching, sure, they can do business with CapForge if they want to go that direction by the end of the video. But I want them to, if they have a CPA already in mind, to be able to have the questions to ask them and understand why they're asking those questions. Right. So the first question up on our list is kind of under the umbrella of handling e-commerce sales tax, all right? Because that's just one niche of e-commerce, which is a niche within bookkeeping. But the first question here is, how do you determine whether my business has a sales tax nexus in a particular state? Why should somebody ask their CPA this as an interviewing type question?
Well, I think it first explains to you pretty quickly whether or not they have experience with e-commerce and whether or not they're going to be a good fit for handling that. Because if they look at you with kind of a blank stare, or they go, "Oh, you sell in more than one state," right? Immediately, okay, well, I guess you haven't dealt with a lot of e-commerce, because yes, it's cross-border immediately, right? Because as soon as you put something in Amazon's warehouse, they can ship it anywhere, and now you've got potential sales tax issues. So even if you yourself aren't sure what the answer is, it's a great screening question, because if they don't immediately say, well, every state has its own sales tax threshold, and it really depends what platform you're selling on. For example, Amazon, if you're doing FBA, they take care of all the sales tax for you. But if you sell on Shopify, then you have the responsibility to, track your own sales tax nexus requirements, for sure in your home state with any amount of sales, but in other states, depending on the amount of sales in those states, you may trigger a requirement to file sales tax. That's the answer they should give you right off the cuff. And if they don't, or they all have to look it up, right? That's a great sign immediately that they probably don't have the experience. They haven't done this before. And they may even tell you flat out, we don't deal with sales tax. A lot of income tax CPA firms don't get involved in sales tax. They'll just tell you to go somewhere else or refer you out for that. So it's a great screening test.
I didn't know that about Shopify versus Amazon, so that was a great insight for me. As far as how can you explain to manage sales tax compliance for multi-state and international sales? So a little bit different from the last question, but what are you looking for with a question like that if you're asking a CPA something as far as managing sales tax compliance in international sales?
Well, I think, again, if you're a bigger e-commerce seller, you're more likely at that point to have generated some sales in Canada, Mexico, and maybe even moved into the EU, each of which has different requirements for how you report sales tax. And they don't even call it sales tax in In the European Union, it is VAT, value added tax, which is a whole different animal. So again, if you ask that question about international revenue, international tax, and your CPA gives you kind of that blank stare or says, oh, we don't deal with anything international, that's a good sign that they're probably not the right fit to help you if your business has reached that size, or even if you are planning to move in that direction, which with e-commerce, obviously it's very easy to move into international sales versus, a brick and mortar type business. You're not going to go open a restaurant over in the UK probably, but having online sales through e-commerce, you could do that even as a very small one-person business. So, you're going to want somebody that's going to be able to help address those questions. What are my responsibilities? How do I keep myself out of trouble? How do I make sure that I'm thinking about all these things I need to do if I go outside the US borders in selling? You want somebody that's going to be able to walk you through that, explain the pros and cons, and help you make those decisions and stay compliant.
Yeah, and I've come across this with some friends actually who are more into e-commerce, where like it's state to state can be so different, and of course if you're going international, it's very different. There's a big difference between selling in Idaho and California. California's got some extra rules that can kind of creep up and get you if you're not aware of them. So next, I'd like to talk about COGS, cost of goods sold. So it might be an issue for like general accountants because they might like misidentify, miscalculate something that's kind of e-commerce specific. So specifically, we're talking about things like shipping, credit card fees, fulfillment costs, things of that nature. But a question that you can ask is, how do you calculate COGS for an e-commerce business, including shipping, fulfillment fees, and credit card processing? So why would you ask this? Like, what is the potential pitfall issue that somebody might fall into if their accountant isn't properly accounting for these things?
Well, there's two issues that come up with cost of goods sold. The first is, just generally speaking, this is the hardest variable to pin down in e-commerce accounting because you buy your inventory, generally speaking, weeks or months before you sell it. You have storage costs. You have costs of getting it from the manufacturer into the country, then from the country, from wherever it lands in the country to the warehouses where you're going to fulfill it out of. So there's a lot of moving parts to cost of goods sold. And, very often, this is where we see the biggest mistakes, right? If you have a business, no matter what it is, e-commerce or not, and you buy something at Office Depot, it's pretty easy for them to say, oh, that's an office supplies expense and code that, no big deal. But when you're talking about inventory, especially if it's come across, from an international supplier into the US, it's sat for a while, it's been moved around, it may have even gone through a return, or there might be some damaged inventory to account for. And then all the other associated costs of selling that inventory to the end customer, that's a lot more complicated and a lot more specific to e-commerce than your typical, again, down the street bookkeeper or CPA has any knowledge of, right? They're just not used to working with somebody that's dealing with those kinds of logistics. And that is the place it's easiest to get wrong. And if you are only making a 10% profit and they get your cost of goods sold off by 10 or 15%, that's going to have a huge swing, and not necessarily negative, right? They might get it wrong on the low side. So now you're over declaring income. You're paying income tax on income you didn't really make because they got the cost of goods sold wrong. So that's one big component. And the way a lot of them will deal with it is they'll tell you, well, we'll just do it on a cash basis, which means whenever you buy something, we'll just record the expense then. The problem with that is you might buy your inventory again months before you actually sell anything, right? So what that might look like is a hugely unprofitable September because you bought all kinds of inventory in preparation for Q4. And then in December, it looks like you made a tremendous profit because you didn't have any associated expenses, but that's when actually everything got sold. So by doing it on a cash basis, it's very difficult to tell if the business is actually profitable or not and make any good decisions about how the business is performing. It's easier for the accountants because they don't now have to worry about timing or lining up when sales happen with when expenses happen. But as a business owner, it's almost useless in trying to determine how your business is doing. So it's a shortcut for them, but it's a terrible way to do it as the business owner. So, if they said, well, we can just expense everything, we can do cash basis accounting, even if you're not totally sure what that means, just take it from me. If they say that, that's not the answer you want to hear. You want to hear accrual-based accounting, and that's the way it should be done. So
big red flag is if you hear cash basis accounting, or if you already are aware that's the way you're running your current books.
Yes.
we kind of covered this a little bit, but like, what's your approach to tracking overhead costs versus direct product expenses?
Well, I mean, those definitely should be separated, and anything that is a variable based on how much you're selling, you really want to track differently than things that are fixed costs. So for example, if you pay a monthly warehouse rent, or you have a monthly office cost, or you have some employees who, work the same amount of hours every month, every week, doing things like graphic design or brand development or customer service things, those are going to be, not dependent on how much you sell. But if you have people who are packing boxes for you, of course, the cost of the products themselves, the shipping, supplies, all those things, that cost goes up and down depending on how much you're selling or not selling. So you want somebody who's going to work with you to understand which cost, which kind of cost any particular thing that you're paying for falls into, and track it appropriately so that you can really understand, here's how much I have to sell just to break even. And then for every incremental sale over that, it might bring $25 of revenue, but it only brings in $4 of actual profit after accounting for all those variable costs. So to be able to, again, understand how the business is performing and be able to dive in a little bit more and make good decisions about it, the accounting and the bookkeeping really need to fit the kind of business that you're running. Otherwise, again, it just gets really hard to see, am I making money? Am I not? Should I order more product? Can I hire somebody? Can I afford to do that marketing campaign? And you just don't know, because the numbers aren't helping you understand what's going on.
And I know that you guys actually provide services far beyond bookkeeping, CPA type services. You can also do these assessments to say like, well, how profitable are we actually? And like, is there leaks in this bucket that we have that we're unaware of? And you kind of just touched upon some of them where it might be like, you don't realize that your labor costs have skyrocketed, and maybe some of those things that you think are being profitable SKUs maybe aren't, because they're maybe more labor intensive or whatever it may be.
Absolutely. There's lots of ways to try to fine-tune the business to make sure it's producing the most it can for you for the given amount of investment and effort and time. And it's easy to, get to a good place only to have it backslide pretty quickly because you're not on top of it. You're not paying attention. You're working on launching a new product and not paying attention to the ones you have. So those are things we can definitely help clients with, making sure that nothing kind of goes off the rails while you're working on other stuff, or just, not paying as much attention as you should. And that's, again, something that, if your current person or the person you're considering isn't really able to give you direction and help with, that might be something to consider going somewhere else, just because just having the numbers isn't really enough if you don't know what to do with them, or you don't know how to take them and then make decisions around that.
Next, and again, this is one we kind of touched on a little bit. You were talking earlier, but we want to get into knowledge on returns and refunds, because I do think this is really important for somebody who's running an e-commerce business. Obviously, a huge pain in their side to handle these refunds as it is, but then if the books are creating a double pain, it's pretty frustrating to have to go back and try to figure this out. So a question that we have here for a CPA might be, how do you account for customer refunds and returns and refunds in financial reporting and sales tax calculations? Like, what's your approach to that? Like, let's say a client comes to you and says, I think my CPA has been doing these wrong. What are you looking at? What questions what kind of dialogue are you having with that potential customer?
We're definitely looking into the details, because it's easy to take a general report and say, okay, 1,000 products were sold this month, so we're just going to include 1,000 products as the cost basis for the expense. But you may have had customer service issues where you had to send out a replacement item, and was that counted for? You might have had returns that were resellable. Did those get counted twice because they came in and then went back out again, or was it tracked carefully so that it was only counted once, even though it was the same product that came in and went out again? And bottom line is, are you making sure that you're not just looking at the top level information and saying, well, every time I sell one of these, I make $5, so I'm making money. But if your profit margin is 15%, but your return rate is 18%, and you're not taking that into account, it may be the case that, yes, on a high level, you would be making money, but once we account for these returns, you're no longer making money. So again, you have to understand what the numbers are and that you're looking at the right ones to be able to make good decisions around the business. If you're just looking at the high level stuff and missing all the details, you could very easily be missing some very important information. And this is something we see, a lot of times people come to us and say, I still just don't understand if I'm making money or not. And I've asked my CPA, I asked my bookkeeper, and they honestly couldn't tell me either. That's not a good place to be.
Well, I feel like this next question piggybacks off this well, because we're talking about inventory management questions. And it says, the question we have here is, how do you handle inventory tracking and valuation for e-commerce businesses? So I'm interested in this because we were just kind of talking about inventory tracking in terms of like, oh, did you get like a refund or a product that you could resell? And that goes into inventory tracking. But like, how do you handle like valuation for e-commerce businesses? Because this is such a big question, because a lot of people get into this space because they do want to exit at some point, but they may not even have a good understanding of what the value of this business is. What's the purpose of this question? Like, what do you think we're getting at here if you're asking your CPA that question?
Well, I mean, I think a lot of people do consider the idea or understand the idea that they can sell this business down the road. And the value that they can sell it for is very closely tied to how well you can demonstrate the financial results from the business, which goes directly to the books. And to the extent that you're doing it on a cash basis versus accrual basis, you're hurting the value. To the extent that you can't demonstrate that you've gotten your profit margins right by carefully tracking the inventory costs correctly and tracking returns and direct, versus indirect costs, all those things hurt the values. One of the things we see people do incorrectly with inventory is they say, okay, well, I see you're selling SKU ABC. How much does it cost you? $5. Okay. They use that same $5 for the next 12 months. But really, you've reordered that product 6 times, and it was $5, but the next time you reordered it was $5.50, and the next time it was $6, and the next time it was $5.15. And they're not accounting for that. They're just using the first cost or an average cost. And again, that can have a pretty significant impact on the profitability overall. And if you're negatively impacting the profit, you are in turn negatively impacting the value that you're going to be able to sell that business for. So it all comes back to, you want a high level of accuracy on a constant, ongoing basis. So you can run the business optimally, you can show the correct and ideally optimize the profits. And then at a certain point, when you decide to sell, you can now optimize the value that you're selling for. If you don't have good numbers, all of those things get hurt.
Yeah, and for somebody, if you were looking to exit out of an e-commerce business, it's like the buyer looking at it, if they start kind of, turning over some stones and they're like, wait a minute, this doesn't match with this doesn't make sense. It's like just your buyer confidence is going to go down too, and it'd be harder to make the deal, I'm sure. As far as another question here that I'm interested in, more so like if you could explain this for me, because I'm curious about it. What's your approach to managing inventory write-offs for obsolete or unsellable stock? Like, do you have an example? I mean, you don't have to obviously use names, but like a hypothetical example of like where you've dealt with this before, and how does that factor in for somebody with an e-commerce business?
Yeah, absolutely. I mean, you always want to keep only current and sellable inventory on the books. There is no advantage to carrying a whole bunch of inventory on the books, or in real life for that matter, that is no longer sellable, right? So all the Joe Biden stickers that somebody, Biden for president, right? Stickers that somebody printed off, those probably aren't worth much anymore. So you don't want them on the books anymore. You want to be able to take them off. That's going to help you from a tax standpoint by reducing your taxable income, by writing down that inventory. And we do see very often people who are either carrying phantom inventory on the books or actual inventory that just is no longer moving or is never going to fetch the original cost that they were hoping to recover from it. And those adjustments need to be made at minimum, right, once a year, at the end of the year before you roll into the new year, so that you're working with good numbers for your tax return. But really, ideally, quarterly is a good cadence. Or if you happen to know, we ordered 10,000 of those Pokemon, but they sewed the head on upside down at the factory, right? So we can't sell those. So we've got to take all that off. As soon as it happens, we know we're going to take a bath on this, or the factory's going to replace it or whatever. But those things should be happening in as close to real time as you can, so you know where you stand, and not, it's December, let me try to remember what happened back in March of last year of that thing that we lost some money on or whatever.
I'm curious on this one. have you ever had examples where you had like a new client come to you and they weren't doing this, and then all of a sudden it was just like you were creating a tax advantage for them immediately just because they were sitting on phantom stock or anything like that?
Yes. I mean, it happens more often than you would think. And, we'll have somebody, and a lot of times it's just because, again, they're getting their stuff done somewhere, but nobody's asking them any questions and nobody's, following up, and they don't know what they don't know. So, I mean, just last week we had a client who came to us. They were doing about $500,000 a year in annual revenue. Not bad. They came to us with books having been done by someone else. And on their books, it said they had $750,000 worth of inventory. I said, well, if you're selling $500,000 a year and your inventory is marked up at, let's say, 3-to-1, right? The most you should have on hand, if you order every 3 months, is like $50,000 worth of inventory. Your books say you have $750,000 of inventory. So unless you went on a huge buying spree a few years ago and you've just been selling it down ever since, that number's got to be wrong. They're like, oh yeah, I don't know where that number came from. That's totally wrong. Well, we wiped out about 3 years of income tax for them by writing that all off because it wasn't right to begin with. But nobody had ever looked at it and said, hey, this number just doesn't even make sense for what you've got going on. I don't know how it got like that, but we've been reporting it and let's fix it.
I'm kind of smiling because I'm like, it's got to be like one of those just like absolute like baller feelings for you guys when you get a client that comes in like that and you're like, all right, you're going to like this call.
I've got some good news for you. Right. Yes.
Speaking of which, like you guys do offer like free analysis for people when they're coming in, right? It's not like there's like, you kind of cover a high level overview of what they're looking at and what it might cost to engage with your firm. So it's not like something where it'd be costly to have like an initial meeting, right?
No, I mean, we always want to make sure that we're going to be a good fit, right? We understand what they need. We're going to be able to meet their needs. We're going to be a good fit. And then at that point, we can give them a proposal. If you would like to work with us, here's what it costs. It's always a fixed flat rate. So they know exactly going into it, what it's going to involve. But yes, I mean, if I have a lot of calls where we go over and say, well, I looked through your numbers and there's a lot of room for improvement here. But the good news is once that happens, you're going to be able to have a much better handle on how this business is actually performing. Looks like there's a good amount of tax savings in here for you. And, if you decide to sell down the road, we can demonstrate a good amount of profitability. And, they're, especially when they've been coming from somebody who just didn't have an e-com background to begin with or wasn't particularly good at it, that they're often very surprised and thankful about the amount of information we're going to be able to give them.
And I'll say this sometimes, like, because I'm not an accountant by trade or anything like that. And I find that when I get into these spaces, sometimes I feel insecure and less than, because I'm kind of like, you might ask a question and I go, what's that mean? And it's like, I can't even answer the question. I'm not sure what you asked, right? And because of that, sometimes there's an apprehension to take the leap to take care of things because it's not fun jumping into those rooms. But at the same time, it's like, if you're somebody who's in e-commerce, you didn't necessarily get into it because you're an accountant or a CPA or you want to do bookkeeping. You got into it because you maybe had the love for the space, and pulling in the right partners and having them be able to interact with you and educate you and get you up to speed is what you need. And it's getting past that discomfort of feeling okay with that, right? So I just wanted to throw that out there because I'm sure there's other people wired the same way as me that are super insecure that maybe won't take the leap. So just figured I'd throw that out there. One thing that I wanted to get into, and we covered it briefly earlier, was questions for those with multi-channel revenue streams. So like Amazon, Shopify, WooCommerce, eBay. You had a great insight earlier where it was talking about sales tax and the fact that Amazon FBA will handle that, but I believe you said Shopify doesn't and puts that on you. So a good question here is, how do you handle accounting for businesses that sell on multiple platforms such as Amazon, Shopify, and eBay? Do you have any other insights, or kind of like, more so I'm asking this question because maybe somebody's already doing this and there's mistakes and things that are happening that they should correct. Is there anything else beyond just the Shopify not handling sales tax? Anything that comes to mind here?
Yeah, I mean, each platform does have its own quirks, and it's even gotten more complicated because you can go on somebody's Shopify store, but use your Amazon account to pay for it, right? So now, okay, well, where did this come from? And is this Amazon money or is this Shopify money? Or you can use PayPal, which you could have also used for eBay to buy. So it's easy to get it all screwed up. And, what we do, and I think the best practice is really to separate each channel. So I want to know exactly how much have I sold through Amazon, how much have I sold through Shopify, how much through eBay, and all the platforms you might have, and what was the cost of each of those. So I can decide, should I be pushing more through Shopify, or is Amazon working better for me? Or do I enhance WooCommerce or my TikTok shop? How's that doing? And you want to really be able to understand how each one is performing for you. And it might be different, right? In the first half of the year, Amazon might be killing it for you. In the second half of the year, your TikTok shop takes off, and you want to know and understand the costs and pros and cons of each of those platforms independently. And of course, then they all roll up together for your total results. But each of them does have pros and cons, and even, things evolve. Shopify for a while was trying to replicate Amazon, right? They were trying to be able to do fulfillment for you and take care of all those logistics like Amazon does. And they just, not too long ago, threw in the towel on that effort. They just, we can't be Amazon. We're really a software play. So as you get into that, your costs are one thing. As they pull back and tell you to go somewhere else, your costs change again. So it's really something you do want to stay on top of. And to your earlier point, right? Nobody wanted to get into e-commerce to do accounting. Right? You got into e-commerce because it seemed like a good business. You were interested in the products. You wanted to, be able to make some money. But it is a very data-driven, numbers-oriented type of business. Margins are important, and knowing your numbers is important. You don't have to become an expert, but it really is to your benefit to work with someone who is, to then be able to get the data that you can then make decisions with and get help on making those decisions if you need it. Nobody should be intimidated or, feel overwhelmed by it. We're happy to, educate people and help them understand, but not doing it at all is really a recipe for finding out 6 months, 12 months down the road that all that time and effort and money you put into it didn't amount to much.
Now, this is an assumption on my part, but I'm assuming with because you work off of QuickBooks because it's the easiest service to be able to work off of with people because the books are transferable. It's just, everybody uses it. Yeah. I'm assuming you guys can create custom dashboards that are specific to their needs. So it's more of a command center kind of vibe when they log into their QuickBooks so that they can see the numbers that actually matter to them. And being in a business where you need to know your numbers, I'm sure that's got to give a sense of peace to people once they start to feel the numbers and understand them better. Am I right with that assumption? Or
we actually have our own software, our own CapForge client portal that'll pull the numbers in as well to make it really straightforward and easy to see what's going on. And again, we encourage people, if you have questions, you're not sure what something is, you want a little bit more of an explanation or even just a basic sort of financial education, we're happy to do that in plain English because it doesn't serve us to have you be confused or unclear about what we're doing for you, right? You're not gonna stick around. You're not gonna see a lot of value in a service if you don't even understand what it is we're doing. So I make that offer all the time, and a lot of people take us up on it. Yeah, I'd love to go through these numbers. Just help me understand what this report is telling me. How do I read it? How do I use it to make decisions? And, great, let's do that because I want people to be, again, you're not going to become an accountant, but you should have a good handle on your numbers, right? If you're driving a car, you want to occasionally look at the dashboard to see how fast you're going. Do you have gas left in the tank, right? Is the oil temperature going into the red, right? So same thing with your business. You want to look at the dashboard. You want to look at the results you're getting and course correct. Make sure you're staying on the road that you want to be on and that things are going smoothly and well. And that's what we're really here for. The bookkeeping and the accounting and all that is really in support of that bigger goal. It's not the end in itself. And I think a lot of accountants treat it that way. Look, I did your numbers. I did my job. That's it. But that's not
from my experience too. I know I've had relationships with past CPAs where it wasn't dumbed down enough for me. And because I didn't have the confidence to really ask the question, I've heard it referred to as notable offenses. So you go, and inside your head, you're like, I have no idea what that means, but I'm not going to ask because I don't want to look stupid. It's just not a great way to feel confident as a business owner. So it's like having that good relationship with your CPA and establishing that up front, I think is very helpful in terms of making sure you don't fall into those pitfalls of just being like,
That's a criteria we didn't have on the list as far as selecting a CPA or bookkeeper. But I think that's really an important one is, do you get a good vibe from them? Do they seem relatable? Do they seem like somebody that's going to take the time to explain it to you at whatever level you want to explain at, and not be somebody who's the holier than thou, high and mighty, jargon filled. I got this special license and went to school for a long time. And you're just a dumb business guy that doesn't know anything. And a lot of them give off that vibe. If that's what you run into, keep in mind, you're the customer. You're paying them, right? So if you don't like the vibe, you don't like the communication style, you don't think you're going to get the answers and the time and attention that you feel like you deserve for the amount that you're paying them, then go somewhere else. There are other choices. You don't have to be belittled and spoken down to and treated like a dummy. And then also on top of that, pay their big invoice, right? It just doesn't make sense.
Yep. Question here on cash flow management. So what's your strategy for managing cash flow when I have high upfront costs like inventory, but delayed payouts from sales platforms? What do you think about with that question?
Yeah, I mean, e-commerce is very much a capital intensive business because exactly to that point, you're laying out all kinds of money upfront to purchase inventory, and then you've got to wait while it gets shipped, gets into the warehouse, gets listed for sale, and finally sales start happening. And then if you're talking about Amazon, they only pay every 2 weeks. So there can be months and months between when you put the cash out and when you finally start to see some cash back. So cash flow management and budgeting is very important in e-commerce, and it's definitely something that we work with clients to help them understand and make sure they're not getting out over their skis and they're not getting themselves in trouble by overextending the amount they're ordering and not having enough coming back soon enough. And it's, every business is different and how it works and the timing and the cycle of turnover of inventory and everything. But it's absolutely something that you want to watch and pay attention to. And to the extent that you don't, it is easy to get yourself in trouble. And then you start borrowing. And then the cost of borrowing, there's lots of e-commerce lenders out there. They kind of look like sharks. They're circling around with their high fees and their non-transparent expenses. But any profits you did hope to make can get sucked down by just trying to get onto that sort of treadmill of debt and repayment and debt and repayment. So it's absolutely a critical category. And if the person you're working with doesn't help you with that or doesn't, offer any support in that area, that might not be a good choice for you.
Yeah, and I think it's worth highlighting here, pattern recognition is so key in business in many different phases of it. But if your CPA is somebody who has no e-commerce experience, they have no pattern recognition to find the pitfalls before they happen, where you probably can look at something very quickly or somebody on your team and they take a look at it and they're like, oh yeah, like your inventory versus the rate at which you're selling things, this is off. Like, I don't even need to dig into the numbers yet. We just know that there's a red flag here. Let's dive into that because you've seen it 100, 1,000 times before. So I think it's just so important. And that's why, especially in this space, because of everything we're talking about, it's important to get somebody who's a specialist with e-commerce accounting. These next questions, I'm sure people will be very interested in because we're going to be talking about tax deductions and credits. So we already talked about write-offs. So maybe you have some, you mentioned the Joe Biden stickers, nobody's going to sell those now. But do you have anything else as far as insights when it comes to what e-commerce specific tax deductions do you usually claim for your clients? If somebody was asking their CPA that, like, what else should they be aware of in this space?
Yeah, I mean, there's a laundry list, and we probably, doesn't make sense to go through all of them. But what I do see a lot of people missing out on or just not thinking about is just some of the standard deductions that typical business owners will use. So for sure, everybody's working from a home office. Even if you're renting a space, you have a warehouse, for sure, you're still working from home. You're using a cell phone. You probably bought a laptop. You're driving to, if nothing else, do product research, find new products and investigate things you could be selling. So you're probably using your vehicle. If you're self-employed, you might be buying your own health insurance. If you're self-employed, you might want to set up your own 401k. There's all kinds of things you can do beyond the obvious just expenses of buying inventory and paying for ads that, is a default part of the business. But I see a lot of people sort of, until I remind them, hey, you've probably done this, you've probably done that. You probably go out to eat with your spouse or your partner and you talk about the business. Or you've probably gone to, a convention or show at some point during the year, an expo. Don't forget, you traveled for that. You got the Uber, you got, meals while you were out. And did you buy any books? Have you watched any videos? Have you, learned anything about the business you're in? That's all continuing education. So a lot of times there's $10,000, $15,000, $20,000 of additional deductions that just, didn't show up. And sometimes people will tell me, I don't know why I need bookkeeping. I have Sellerboard or one of these softwares. It's kind of a dashboard, pulls data from Amazon and pulls data from your inventory and gives you some baseline numbers. But what it doesn't do is include any of those kinds of expenses. So if you're just using, Sellerboard or some other software as a dashboard, yes, it'll give you, your daily sales approximately, but it's leaving all kinds of money on the table that you could have been claiming because it just doesn't get into that information. So I think this is again where, the cost of a qualified and specialist, accountant is going to be worth its weight in gold in terms of additional things that you're not even going to realize you missed out on when you just go to the, the local H&R Block guy or the down the street bookkeeper who, it just doesn't even know to ask these questions.
I love that H&R Block is just catching strays right now, but I'm okay with it. This probably isn't even worth sharing, but like a long time ago, they did my aunt's taxes, and they messed them up pretty bad, and it was super frustrating for her. And their resolution was they gave her a coupon for a discount off of next year's taxes. I don't know why. It's just one of those things that always stood out with me. It was like 25 years ago, probably. Yeah. All right. So next questions here. We talked about international sales. You were mentioning VAT earlier in the EU. I'm not going to ask a specific question here. More so just any insights you have for any sellers that are doing international sales right now. What are the common pitfalls that maybe an inexperienced CPA is missing on their account? Like what are things that have popped up in the years that you've been doing this?
Well, I think one of the things that they just don't have the knowledge on is to advise in the first place on international sales. And really, Europe isn't just a different version of the US. It's an entirely different place to sell. Each country has its own specifics. And you've got costs associated with localization, right? Getting your labels converted to German or Spanish or Italian. And then in the EU, they've got all kinds of extra things. They're very big on climate change and protecting the environment. And so there's a lot of additional reporting you have to do with the origin of the product, the amount of carbon used in the product creation and shipping it to the location where it's going to be sold. There's just all kinds of added cost, complexity, the extra cost of shipping it to Europe and fulfillment there. So a product that might be profitable and a good seller in the US is not necessarily going to easily translate to being sold in the UK or the EU. And so somebody that hasn't seen that play out 100 times may not be in a position to kind of advise you on the pros and cons of exploring that market. Or if you're in that market, we get questions all the time. Is it better to recognize the revenue in my home country or the US? Should I be a C Corp in the US? Would that be more helpful? Or I'm based in Wyoming because I don't have a physical presence. How does that work? Or is Delaware better? So all these kinds of international trade questions in US versus Europe or Canada and Mexico for that matter, and the VAT and all the additional fees, those are things we can speak to because we have clients doing it. We've worked through it. We've helped out on resolving those problems already. And you're not having a conversation with us that it's our first time, right? But for a lot of other non-e-com types, that's going to be the first time they've ever even heard of it. And they're going to be completely lost on, I don't even know what to tell you about that. I've never had a company that was, set up in Estonia, but doing business in Wyoming, but sourcing products from Canada. And we've got 3 of them. So, it's just a different level of experience.
One thing I think is worth mentioning here is automation and scalability. So somebody comes in and maybe, they're doing $500,000 a year. but all of a sudden they're doing 5 million, 50 million. Those are different types of businesses. So a question here is, how do you help e-commerce businesses scale their accounting processes as they grow? And I'm sure you've had clients that have done that in the past, right? What have you found? What's the pattern that you've seen there that really helps people through those scenarios?
We always kind of look at the scope of the activity that's happening from an accounting standpoint in the business as it grows. And a lot of people start out, you can run everything from a laptop. You're placing orders to China, you're getting it shipped to Amazon, you're getting deposits to your bank. It's pretty straightforward. But as you get into more complex operations, especially if you start doing wholesale, where now you're invoicing and you've got customers paying on you on terms, in addition to your buying inventory on terms, and you're following up with them, and you've got different platforms you're selling, and some is direct to consumer and some is the wholesale model. A lot of times you get to a point where you really do need somebody who's going to be in-house, able to, in real time, day to day, follow up on those, generate those invoices, follow up and send statements to clients who might have multiple invoices open with you. And we advise clients when we get to the point where we say, okay, this is what needs to happen, and this is not a service that we have built in. So here's who you need to hire. We can help you train them, stay on top of them, make sure that they're performing what they need to do. But this becomes an in-house function. A lot of times, companies that get to 5 million, 10 million and up, depending on their business model, and they get to that point. So we still have a role to play, but we have, the accounting function overall is expanded, and we'll absolutely help clients figure out that. And sometimes the time comes when really it makes sense to move the whole accounting operation in-house. And we've had clients do that, and we're happy to help with a transition. And, I want them to be successful. That's my ultimate goal. So if that means at a certain point, it no longer makes sense for them to continue working with us, but to build the facility in-house or whatever the case, then that's the direction I'm going to point them in, because I want them to continue to be successful and leave happy and refer us other smaller clients that they run into, rather than try to hold on to something that we're just no longer a good fit for. So, you have to know where you work, and you have to know where you stop working, and make sure that you can help them transition to somewhere that's going to work better for them.
I like hearing that too. That's always nice when people have that ethos about them with business, rather than how much can I keep. It's just how can you service the client? And that's a great perspective to have. Last question here, and this one's very specific, but I know that this is something that pops up for a lot of e-commerce owners, right? And it's basically let's say you got an e-commerce business and you're selling in a bunch of different states, and then all of a sudden you have a situation where a sales tax audit occurs in a state that you didn't realize that you had a nexus or a connection to. So I've heard this happening in several states. Recently, somebody was mentioning this to me, that in California, they hit a certain threshold, and now California, correct me if I'm wrong on this, they want the income tax of that, of the sales, not just the sales tax. And these issues that are popping up, I'm asking this question because if somebody happens to be in these shoes right now, it's an incredibly stressful situation to be in when you're audited. How would you assist with that? Let's leave the other CPA out of this, because chances are they have no idea. But how do you advise a client who's going through this stressful situation if they're going through a sales tax audit?
Yeah, the first thing is to, make sure that the right numbers are there, right? So if you haven't been getting the right numbers, and the audit is a result of them thinking you had, the threshold in California currently is 500,000. If they thought you had 550,000 of sales in California and they're expecting sales tax, but really the right number was 480, we want to make sure that we've got the right number. We can demonstrate that to California and say, hey, there was a miscommunication, or however you got these numbers. Here is the updated and correct values, and here's why we don't owe. Or if we're still over the limit, okay, then here's what we need to show them. Here's what we owe. But a lot of times you might owe the tax, but the penalties and interest can be abated if you can show that it was a first-time offense and that you were attempting to be compliant, you just didn't realize. So we always try to work with them to whatever we can do to pull back penalties and interest, and even sometimes first time, whatever it is, what we really didn't owe, but we'll start paying this year. We want to work with the client to make sure we get the best possible outcome, whatever the situation is, and then obviously, let's do it. As long as this happened here, let's go through everything else, make sure there's no other surprises, no other skeletons in the closet here that are going to catch us off guard, and that we've done everything we can to set ourselves up for, success, so that we're not dealing with an after the fact audit or, a surprise notice from some state, but we're ahead of the game. We know what our obligations are, and we've, met them ahead of time. So it is stressful, but it's a kind of one step at a time process. And a lot of times we can get a much better outcome than it first seemed. Because usually what happens is first you get a letter that says you owe $1 billion. And you go, oh my God, how am I going to pay that? So, okay, let's understand what they're asking, where they got their numbers, what the right number is, and then who we talk to show them what the right number is. And then if it's still big, let's get on a payment plan, get the penalties and interest waived and everything. And a lot of times it's not nearly as bad as it seems at first. And I think part of their tactic is just to send you a big scary number to get your attention. Because if it says, we think you owe $500, you can throw that one, who cares? But we think you owe $50,000. Now they've got your attention, even if the real number is only $5,000 or something. They've got your attention. But, stay calm, step at a time, figure it out, talk to the right people, do everything we can to, mitigate any added penalties or interest, and then get them on track so there's no future surprises.
It's unrelated, but I'm kind of smiling because this is probably about 15 years ago. I started up like a consulting business, like building websites. And I had a client who was a dentist, and I had a placeholder image on his website just to show him, and the placeholder image was a Getty's image. And they did their reverse image search and found it, sent a notice, $1,000 you owe us. I panicked, paid it just because I didn't want the client to think anything, was off. Right. And the client, the dentist even said, I hope you didn't pay that. Like they just send those out to scare. They probably would have taken $50. I was like, oh, okay. Yeah. This just kind of reminded me of that when you're going through the story here.
Yeah.
But again, I want to make mention that if somebody's looking for a free analysis and they can get in touch with CapForge, there'll be a link in the description of this video and they can reach out to your team. I appreciate you so much for answering these questions, and I'm sure the audience watching will as well, because once you have the right partners around your business, like business gets a lot easier. So thank you for taking your time and appreciate your expertise on this.
Yeah, thanks for having me. It was good to have this conversation. I think getting this content out there is more important than anything, so people know what to ask, know how to make good decisions, know how to find the right partner. And then, like you said, the stress levels go way down when you feel like you've got help in these areas where you otherwise sort of feel out of your depth.
And as mentioned earlier in the video, there is a link in the description below that is a referral link from me, so I may be compensated if you use that link, but a meeting with CapForge is actually free. They do a free analysis of your bookkeeping as it exists today. They can provide some insights that you may be missing also through that analysis, but they can give you a clear-cut quote of what it costs. One thing that I like is they do a flat fee pricing model, so you know what you're going to be spending month to month, and they can set that up for you completely free. I know it's not the easiest thing to look at switching over your books, but if it can give you that peace of mind and feel like you have a firm grasp and understanding of your numbers and therefore your business, that's how you grow. So feel free to check out that link in the description below. I appreciate that. And what you'll see on the screen here is another video you may find interesting when it comes to e-commerce, CPAs, and accounting. All right, I'll catch you in the next video.